Well, good evening and welcome to the RandSwiss 2025 and Beyond webinar. We're going to take you through a whole lot of different questions. They're quite difficult questions. We do this once a year. I think this is our 7th year in a row of doing this. We've got a bit of track record on doing it as well. So I think we're starting with a quote, and we'll start by setting the scene a little bit. But Viv, this is your quote, you know?
And this is not just me. This is actually a quote I found in a recent New York Times article by Ezra Klein, who's one of the better, smarter analysts out there. And it basically ends up with this little thing: the old world is dying and the new world struggles to be born. Now is the time of monsters. And this was a quote by a guy called Antonio Gramsci at the turn of the 20th century. And you can imagine what happened afterwards. You had World War One and Two. We had, the emergence of things like, cars and airplanes and that kind of stuff. And we are actually living through a period that is as transformational in many ways as that period of time. And we must be prepared for the fact that we are going to be seeing things happening over the next couple of years that are going to be very, very, surprising. And the one example I'll give to you right now, as if anyone has looked at the executive orders being pushed by Donald Trump over the last, say, couple of days, one of the things he did was he changed the rules around, or trying to change the rules around basically DEI as well as birthright citizenship in the US. This is not something anyone has tried in the last 60 years. It's one of the biggest moves we've seen. And in the world is as uncertain as right now, be prepared for more of these very big, very radical moves by politicians, business people, in many, many ways. So yeah, when you have this uncertainty, this could be the time of monsters.
There's a time of monsters. So that's our kind of theme for the day. The agenda today, so we can start with just an introduction to the company as usual. And we're going to look at the year in review. We're going to look at the questions we asked last year. What expectations are met? Where did we go wrong? And I suppose, how has the world changed over the last 12 months? We're then going to set the scene a little bit, go through, I suppose, our big themes for the year, and then we're going to tackle the 25 questions. Of course, this is also an audience participation type webinar as well. So we've got a link. We're going to send it to you afterwards. It's later in the presentation as well. You guys can answer these questions too, and of course, we give out prizes and all of that. So we've obviously got the prizes from last year. We've got a nice lint hamper. I disappear, but there's a nice lint hamper as well. So that's kind of the Swiss. Master chocolatiers. And then we've also got, the kind of Rand part of RandSwiss, which is you either get a Rassie Erasmus book or a Nick Mallett book, both signed by the guys themselves. If you don't want a South African version, we can also give you Investing Offshore, if that is your preference. But we'll chat to you afterwards, the winner. There's actually, I don't think the winner is on. And if you're not on as the winner, it goes to second position. And we know second position has registered for this webinar. Then we've kind of finished with the prize giving, and we're also going to look at practical application over our portfolios as well. So quick overview and introduction just in terms of our business. Our business really is securities broking, managed solutions, and wealth and advisory. And you're kind of going along a spectrum. Guys on this webinar will be trading themselves, self-directed traders that, you want to hear the ideas, you want to see where things are going. We've got every year we get all the stock picks from everyone in the company. We track them. We look at how our stock picks did last year, and we give you a whole bunch. Everyone in the company picks 3 stocks that they have to hold for the rest of the year. So it's a nice stock pick slide if you are trading yourself. Managed solutions, Viv and I run the 2 equity portfolios. We're going to do just a slide or 2 on each of those equity portfolios. And then, of course, the big push for the company over the last year has been really bedding down our wealth and advisory business, which is, it's particularly exciting. There's some nice new system rollouts that we're going to do for you in the next sort of 2 months. I'm really excited about this part of the business. It's growing really quickly, and we're getting very good feedback from clients that are taking it. What do? We've got global partners, and we've really, I think, over the last little bit, really deepened our relationship with a lot of them. We're doing some really interesting things with the partners. I mean, everything. I don't want to go into details, but some really cool integration and really cool, just very, very interesting types of transactions with them compared to what the more vanilla share trading stuff that we've done in the past. Of course, supporting us, we've got Krista as our executing trader. Gabby's joined us. We've got a couple other people joining, and of course, everyone hopefully watched Anthony Clark's webinar last week. I think there's already 1,200 views on YouTube of it. He gives he kind of supports us in terms of the small cap stuff on the JSE, and then Piet Serfontein, technical analyst. I think he's the chairman of TASA as well. Also, a lot of research coming out of him. Obviously, you guys probably know Viv and I from the media. A lot of the kind of thoughts that we give, if you kind of enjoy this kind of commentary, I mean, check us out on the shows as well. We try and kind of give our ideas as much as possible. Last couple of years, we've done really, really well. I think 3 of the last 4 or 5 years, we've ranked as the top securities broker, currently holding top full service broker at the moment. But like I said, the company is in a bit of flux at the moment, which I'm excited about the changes that we're showing. Okay, so let's do, that's us. If you've got any other questions, pop us an email or check us out on the website. But I think let's move to the year in review. So this is how we did last year. So I think a caveat as well. So we got 18 out of the 30 questions right. And remember the way that we structure these questions, these are not meant to be easy questions. We essentially divide them into the different markets and different, I suppose, asset class groupings. We pick some black swans, and we're looking at things that are there are some sitters in here. There's one real sitter. I don't know if you guys are going to spot it. When I was going through the presentation before, I saw there's one that everyone should get 100% for that question, I hope. If not, we've got big problems. But they're meant to be very difficult questions. So, for example, if we're trying to predict the currency, we're taking the currency rate at that level, adding 6%, which is the historical level. So the historical weakening of the rand against the dollar, if you're looking at the rand dollar pair. So we're trying to make these as difficult as possible. If we're saying, will SA's GDP be above 1.5%? We're looking at the expectation that's coming out of institutions like the World Bank and the IMF and the SARB, and we're looking at kind of the median prediction here. So we're saying the smartest institutions in the world are saying this. Is it above or below? These are not easy questions in terms of, is South Africa going to collapse 20%? Everyone can get that one right. It's designed to almost be a 50-50 question. So we got around 60% this year around. I don't know if you can spot any trends here, but I think in terms of market stuff, we're really good. It's 100% on the market stuff. Commodities a little bit hit and miss in what we said. The figures there are actually the yes, no is the correct answer. And then our prediction was obviously in last year's webinar, for example, in currencies, will the US dollar is our finish above 2024? The answer is no. We were a little bit more bearish, so that's why we marked that one wrong. So yeah, that was our kind of scores last year. I'm not going to go through these questions in too much detail unless there's anything you want to pick out here, because I think we're going to talk about each of these different themes as we go through the new questions for this year.
Also, I want to make guys understand, it's not just about getting the answers right. It's about thinking about what the themes of the next year are going to be like. And so if you look at, for instance, if you look at the results in terms of the answers here, I was one of the worst performers. I would admit that.
And yet the top stock picker and the portfolio that performed the best, the portfolio that beat the S&P 500. So really these are thought exercises, and we're going to discuss the drivers around each of these questions as we go through the presentation. And maybe we're qualifying that a little bit as well, because we didn't beat the audience last year. But top forecaster, I mean, you'll see a bit later on. That's in the prize giving. Top forecaster got 80% of the questions right. As I said, we were at about 60. Audience was actually at 63. So that's kind of where we were. 2022 was our glory year, I think, where we didn't just beat the top forecaster, we beat the audience and the top forecaster.
But the stocks did not perform as well.
And 2022, if everyone remembers, this was a year where the market was down 20%. So like I said, that's kind of how our predictions have done over the year. But really, this is a thought exercise around each of the different markets and the different drivers of financial markets. So I think let's set the scene. Viv, you want to take us away? First thing, political shifts towards the right.
Yeah. So the global shifts are going towards the right, not just in Donald Trump in the US. Pierre Poilievre is probably going to take over in Canada from Justin Trudeau with a bit of gap with the left-wing person in between. But looking at the UK, Labour has been in power for a few months, massively unpopular at the moment. Almost on par with Reform, which is basically Nigel Farage's joke party almost. We've seen what's happened in Argentina with Javier Milei. Meloni is one of the most secure people in Europe at the moment, the Italian Prime Minister. We've seen, for instance, the rise of the AfD in Europe, in Germany. Le Pen looks really strong in France. Globally, the shift towards the right is pretty substantial. One might say right, one might say populist right, because these guys are not just on the right wing of things; they are on the far right in terms of like their extreme views. So Nigel Farage, for instance, is more right wing than the Tory party, which is like the right wing party. Marine Le Pen is more right wing than the historic right wing party in France, and Javier Milei is a total wild card. And so I think that you've got to expect that, like I said, when we have huge changes demographically, politically, economically, you expect these kind of figures to rise up.
Okay, the next thing, yeah, I think that's a big theme is going to be politics, but probably the bigger theme as well is the technological progress that we've seen over the last little bit. And I think when I did my final global equity presentation for last year, one of the things I highlighted with the kind of rise of AI and with just the speed at which we're seeing things change, you're going to get, I said, we're going to get a lot of headlines this year that are almost miracle type headlines. It's going to be, this has been solved, that has been solved. Suddenly driverless cars are going to be here. The pace of technological progress and almost the miracles that we're seeing at the moment, I think that's a continuing theme. I mean, it's something that that is very exciting, and certainly in financial markets.
I mean, last year, one of the things we did make a question about is, will we have driverless cars this year? And we did. There's a company called Waymo, which is a subsidiary of Google/Alphabet, and they are already operating in San Francisco and a couple other cities in the US already. They are looking to expand to a number of new cities, and these are totally driverless cars. You call up a car, it comes with no driver in it, you get into it, it drives you to your destination, no one is in the car besides you. And the obviously advantage for this is that you don't have to bother with it's what's a creepy Uber driver if you are worried about that kind of stuff. And speaking of that, we have seen in San Francisco, which is the longest track record, has the longest track record of this thing operating, which is only from the end of 2023. So from the end of 2023 to the end of 2024, this company took about 1/5 of the total market share of the driver market, or the taxi market in San Francisco, eating into both Uber and to Lyft's total drivership. Already I think it's doing like 150,000 rides per week, and this is, like I said, only with a few cities open at the moment. So that kind of technological change is very, very shocking. And the thing is also,
and robotics.
Robotics coming as well. I mean, I was trying to convince Gary here that Ransos need to buy a robot, and you think, okay, this is ridiculous. Why buy a robot? It's about 40,000 rands, and it's an amazing robot. It's and the thing is that the same robot that we are talking about 40,000 rands right now, which is about 160,000, no, $1,600 before taxes and that kind of stuff. It's called the Unitary Go, and it does amazing things. Look at the video on this stuff if you want to go and look at this. There is a robot called the Spot robot from Boston Dynamics, and that's the company that does all these amazing robotics videos. That thing costs $75,000. Okay, and that was like coming out a couple of years ago. The drop in pricing has been amazing, and I expect fully that we'll see these kind of robots coming into play dramatically. Let's take how right now. I was on holiday in Christmas, and I saw so many people with drones, amazing drones, taking pictures, taking video of a whole bunch of stuff. That's like ubiquitous at the moment. These robots are going to be there in about 2 or 3 years' time. And there is a term called the Great Stagnation, referring to a period from about 1970 to about 5 years ago, where there was very little technological change beyond what we saw on computers. So for instance, the internet and cell phones and that kind of stuff. Basically, everything stayed the same except for screens. The screens in your house, your TV, your phone, that kind of stuff changed, but your car was the same. Your travel was the same. The way you washed your dishes were the same. That's all going to change in the next few years. And I think that kind of technological change is something that we have not experienced, like I said, for almost 50 years.
No, and I think that's the key point here is that it's going to be across all industries. It's whether it's medical advances, whether it's literally a manufacturing process or the way that you smelt steel. I mean, it's across every single industry. And I think it's driven by the access that we have now to knowledge and the ability to take, I suppose, almost medium skilled people, plug them onto AI technology, and suddenly have highly skilled workers as well. So that, I think there's a lot coming in.
One thing you mentioned it, medical stuff. The medical technology is going to be coming to play the next year or two, because a couple of years ago I mentioned to you guys it's called Fold, which is this technology to create proteins or figured out proteins. And it, according to the guys at the DeepMind, it roughly took 1 billion years with a B worth of human endeavor and did it in a couple, like months. And that technology, basically from a couple of years ago, is coming through the market right now. And we're going to get drugs in the next year or two based on this technology. It's going to be a dramatic step change in just the level and quality of drugs you're going to have available for yourself.
Good.
Mm.
Then, of course, climate change, which at the moment it's drill, baby, drill.
Yeah.
Let's repeal anything that has to do with green. Let's pull out of the Paris agreements. So, what climate change at this stage? Where are we at? I mean, yes, ESG has obviously always been a very popular theme among investors, but does Donald Trump change all of that?
Most certainly, and not just Donald Trump, but BP has recently changed its philosophy around climate change as well. Basically, the previous CEO that was kicked out because of some inappropriate relationships he had with some underlings was much more in favor of things like, it was ESG, green technology and so on. The new CEO, much less in favor of that. And you're seeing this shift happening not just in the US, but in Europe as well. The AFD, which is the party, the right-wing party in Germany, is much it was more negative towards anything to do with climate change, anything to do with green policies. They want to basically make sure their lights are on and people can afford their electricity bills, etc. We've seen similar things happening in companies, but in places like Argentina and places in Asia as well, where the focus is much more on getting things done as opposed to focusing on things like climate change. And the picture we have up here is a picture of I think LA, which recently had a massive fire, and you can see the kind of huge impact it had. But the important thing I want to mention here is not just that this is obviously environmentally important and whatnot, is that there is a financial impact on this. Insurance companies are no longer insuring these things. So a lot of these guys whose houses burned down were uninsured. And there's a couple of places that you can't get insurance for. Much of the west coast of the US can't get fire insurance anymore because fire is obviously much more prevalent now. What used to happen once in 100 years is happening once in maybe 10 years. And where you could pay 1% of your value of your house to basically insure a 1 in 100-year event, you're going to pay 10% to insure a once in a 10-year event. That's a totally different value proposition. The same thing is happening on the East Coast, where we have hurricanes talking up in the US. And the same thing is going to happen in other parts of the world as well. Climate change is going to change the way the weather performs, and that's going to change how you can and cannot insure things. And that, I think, is going to have a huge impact.
Well, I suppose we had monsoon season in Joburg, that's
Yeah.
for sure. I've forgotten what the sun looks like. Yeah, demographic changes. Now, I think this is something that we generally flag as well. It's typically a much longer term trend as well. But I think the things that we've been talking about over the last 5 years are now starting to actually materialize. And I mean, obviously, markets are always going to be forward looking. So, when it's a 30-year out event, markets might trend towards it, but it doesn't become as pressing. But I think we're starting to see real demographic shifts and real concern coming into it.
Yeah. So this is a picture of basically what you expect to happen in the next several years, in terms of population change. This is not birth rates, this is population change. And only the places that are green or light green are going to maintain or increase the population. Everything that's red or pink or whatever is going to have a falling population. You can see much of the world falling population, including places that you may not think about, like India is going to have a falling population by the end of the century. China, dark red. Russia, dark red. These places are effectively dying out. The US, it's a lighter kind of, red, but still negative population growth. Canada, very red, and so is much of Western Europe, with a couple differences here. The only place in the world where you are going to have opportunities for growth is mostly going to be in Africa and 1 or 2 small pockets in Asia and some in South America. Now, the thing about this is that you have to understand that most of the technological changes, most of the innovation happens with young people. By 2035 or so, roughly 2 out of every people added to for every one person added to the global workforce in 2035, okay, there'll be 2 added from Africa. Okay, so we're looking at a huge shift in how the world's going to operate in the next 10 years. Okay, and like I said, most of the innovation, most of the energy in the world comes from young people, and you're going to expect Africa to do something in the next, say, 10 years. Unfortunately, this is a double-edged sword. If you can basically harness this new brain power, this young people's energy, etc., you're going to have a very, very popular time, or very good time for Africa. If you don't, you're going to have a lot of disgruntled young people of energy, and that's going to be not so good. They're very disruptive to regimes. So yeah, Africa is going to be the opportunity, I think, in the next couple of decades, just because it's the only place in the world where there's still that youth population that's going to be large enough to impact things.
That could be very dangerous
Very
as well.
dangerous. Very good.
So a very
Very bad.
binary bet. It's either going to work really well or it's not going to work at all.
Yeah.
But the chances of it kind of same old for the next 10, 15 years, probably quite low.
Very low.
Okay. Yeah, and demographics is destiny. So yeah, this will happen.
And understand, like, this will happen by what means that 10 years is not enough time to start building new 18-year-olds. Like,
but eventually we are literally going to build them. You're talking about robots.
Yeah, the robots.
This can be replaced. We might have smaller populations, but can the pace of technology increase the value in economies and the quality of people's lives to that extent that we don't need replacement populations? Because I suppose that's the big question.
Yeah, and if you do that, what happens?
Because let's say, like, stock markets that have rallied and I think the economic growth that we've seen over the last 100 years has been on a rising global population. It's one of the base assumptions of growing economic power. As
property prices,
we've discussed, like, women entering the workforce. I mean, the economic boost that gives, those are the kind of like monumental shifts that we've seen. Now suddenly falling demographics, smaller populations, what does that do to stock markets? Like, that's not a positive story around equities. It's not a positive story around really anything.
Yeah, and not just equities, property as well. Think about less people, less need for housing, less need for older people. They don't have to have a workplace and a house. They stay at home. So this is all going to be impacted over the next, like I said, 10 years or so. And 10 years, like I said, we're talking about a period of time. You can't produce human beings that quickly. You can't produce a working age population in 10 years. You need like 20 years to do that. So we already know what the population is going to be in 2035 in terms of working age population. And it's going to be lower than it is right now. So yeah, this is like you said, it is destiny. It is already set in stone.
So our 25 predictions, I suppose. Okay, so we try to make them as binary as possible. So the first question is, will the gold price finish above $3,000 an ounce? So I think we both said yes. Now, why did we say yes? So what, we're around $2,700 an ounce now. I mean, gold is an interesting one because it's very difficult to price, because it's essentially a medium of exchange and a store of value. I mean, that's had a long track record of 1,000 years. And I mean, we often get the question, should I buy gold? Should I buy gold miners? Is it even worth buying? And I mean, if you take the Warren Buffett approach, he's saying, but it doesn't produce anything. A farm every day will, you'll sow seeds and you're going to get thing. Gold is kind of almost the greater fool theory. It's saying that I buy this lump of shiny metal and I hope that there's someone else around in the world that will pay more for the shiny metal. In a world where populations are falling, we should be quite negative on gold, but I don't think I am, because this is a dollar-priced asset. It is essentially a currency pair. It's a dollar-gold currency pair. And I think over the long term, we've seen that most fiat currencies lose value, and that's where you're seeing the lift. You're probably not going to get the same lift on gold that you would from an equity market or from a productive asset. But I mean, I still think the value of currencies is going to be falling. You talk about higher inflation coming out of the US as well. Gold is an inflation hedge as well.
And uncertainty.
There's uncertainty. I mean, if this is the age of monsters, that's kind of the hedge in the portfolios. And I suppose a question that we get a lot is, should I buy the gold miner? Should I buy gold coin? Should I buy the gold ETFs like GLD? What is the best access point into the gold market? I think from my point of view, it really depends on who you are. If you're post-apocalyptic, if you think that the world is going to end, well, not the world is going to end, but you think that the financial system is going to collapse to the extent where you can't get cash out of a bank account and everything is, it's a zombie apocalypse. I think gold, they say whiskey and gunpowder, but gold will be a store of value, that when the world rebuilds itself, it's been a store of value for 1,000 years. It's something that you can look at there. I mean, if you're looking at the ETF, it works out to about 400,000. If your investment is more than 400,000, in terms of the ETF cost, so the holding cost of the ETF, it's actually cheaper just to buy Krugerrands, go and rent a strong box, stick them in a strong box. Obviously, you don't have the speed and the liquidity to buy and sell it. But that's kind of like the post-apocalyptic view, the real hedge view. If you're looking to make money off a short-term movement in gold, I always say go the gold miners. You can go and look at the charts of Gold Fields, Anglo Anglo Gold, Harmony. These they're traded on a local exchange. You don't have to use offshore allowances to get them. And essentially, these companies have what's called operating leverage in them. So their AISC, which is their all-in sustaining cost, they're sitting at around 1,300, 1,400 at the moment. Gold price at 2,700. You can imagine your revenue is coming out. Every ounce you sell, you're getting 2,700. Your costs are call it 1,500. The rest just drops straight into profit. And that's why you see these huge kind of geared moves up and down in the gold miners. So if you're trading them and you're taking a shorter term view, definitely the gold miners for my money. And of course, you can add a bit of leverage to that if you really want to be brave. The ETFs are interesting. I mean, the ETFs is almost, if you think that the period of uncertainty is going to be short, it's either a smaller position that you need to take. So you want to take a 100 grand position in gold, not worth going and getting a safety deposit box, the hassle of actually going and buying physical. Then I think the ETF is then the most appropriate for you. Or if you literally, it's going to be a short-term position, you want to buy literally bullion and sell bullion yourself, then I think that's the ETF. So that kind of, those are the three vehicles I think that clients are looking for.
Point one more thing out as well. So it's not just about individuals, it's also about countries as well. So if you look at what happened with Russia and the US, when the Russians got into war in Ukraine, one of the things that happened was they were cut out of the global financial system, including anything to do with dollars. So at one point in time, they couldn't pay their debts because they couldn't get access to the dollars to pay their debts. I think as you go into a future in which the world is becoming more balkanized, where there's going to have more tensions between the US and China, etc. The Chinese already are starting to cut down on purchases of US treasuries. They have to find something to fill that up. I think, is it going to be a brick currency? Is it going to be gold? And they've already started to jump up their gold demand.
Massively, So if you look at the Chinese central bank buying, they paused kind of middle of last year for a couple of months. But it was a big theme last year. That I mean, the gold price was outperforming S&P 500 for a good chunk of the year as well. So it was a very strong year for gold, and I think that momentum probably will continue, especially if you see that central bank buying, which really are the big whales in the market.
Exactly, and so also the places in the world that are going to be affected by some of these studies, especially like in China, which is really, I was wrong in my China pick because I said it'll be less than, I think it was 4.5%. I still think I'm right. I think the Chinese did not grow at 4.5%. I think the number was probably 1 or 2% lower than that, and they fiddled the numbers. But there is definitely something happening in China. Go into any kind of website about China, look at any kind of story about what's happening in China. I mean, recently there was a funny story about some people basically went to get some dumplings at a city, and it went viral, and suddenly a whole bunch of people started going to the same city to get dumplings. They cycled to it, and the government cracked down on it because they didn't want people to associate, even if it was just to go to buy dumplings. You couldn't do it in like large groups. You had to do it like in groups of like 5 or 10 or whatever. And that just shows how scared the country is about, or the government is about, any kind of group getting together, even if it's just to get on a bicycle and go buy some dumplings. And that is a situation in which people do want to have a safe haven, because it may not be a global situation where things are getting dangerous, but things are certainly getting dangerous in some countries like China.
100%. Okay, so let's move, keeping the precious metal complex, I suppose. So platinum price above, okay, so this is finish above 1,000. So will we be above 1,000 at the end of the year? We're both saying no. I think my thesis on platinum is pretty clear. I mean, longer term, we're going to see less demand for autocats. We are going to see a move towards EVs. Trump might support the platinum price a little bit, but remember, just under half of all platinum is used in autocatalytic converters. It's a very big motor vehicle story. There are lots of other reasons for platinum demand. Japan, weirdly, is a big platinum investment destination. So Japanese actually invest in platinum ETFs, and the platinum ETFs then have to go and hedge their position by going and buying physical platinum, and that does actually support the markets. If you're interested in the platinum market, Johnson Matthey reports are absolutely incredible if you want to look at the platinum market dynamics. But I think the idea that we might not need as many PGMs in future mobility, and the fact that that really is going to put a lid on the platinum price. At the same time, is Russia and South Africa, who I suppose supply, 80% of the world's platinum, do we have the ability to get together and form a cartel? I don't see it happening. We haven't done it in years. I can't see us squeezing the price. We've got more stable electricity supplies. Our mineral extractions are looking better. So difficult to see a supply shock there. And also, you've got that big question mark around demand. And I think that's for me why platinum probably will remain subdued.
Yeah, and also driverless vehicles are electric vehicles. That's just how it works. You don't take a petrol vehicle and make it driverless. Electric vehicles are much more suited to the technology. If that's going to be a big player going forward, demand for towards petrol vehicles, diesel vehicles, fossil fuel vehicles is going to go down.
Okay. Yeah, Brent crude oil price, will it trade above 90? Okay, so we don't agree on this, which is interesting because you've been like an oil bull for as long as I can remember.
Yeah.
Oil prices are always going up. But where's the oil price? It's going up. So interesting. Why you don't think that we could get a temporary spike? I mean, what we've been hovering above $80 a barrel for the last couple of weeks. We've kind of dipped under. We haven't seen a big move, even though we have had obviously the inauguration of Donald Trump. We haven't seen a big move. What are you thinking around oil prices at this stage?
A couple of things. Firstly, Trump, drill, baby, drill. That's his thing. So the US is going to produce more. And one of the things that about the US production, a lot of it is basically fracking. That means it can come online very quickly. And therefore, if the price goes up too much, these guys are going to come online and start selling. Next, Canada is going to change its government. That government's going to be more right-wing. That government's going to be much more willing to basically authorize, export of petroleum, etc. Next thing, Trump wants to make a deal with Russia. That's going to bring oil onto the market. The Trump coalition is actually more negative on war with places like Iran than the Biden administration was. That is also going to be positive for oil, because production at least, not for pricing. And so I think all these factors together means that we are likely to see oil prices with a bit of downward pressure over the next little while. And I do think that $90 a barrel is probably a bit too high, because at that point in time, we will see a lot of production come into the market, especially from the US, which, by the way, is the largest producer of oil in the world.
I'm kind of banking on Brent crude oil and West Texas Intermediate are two different types of oil. And I don't think Trump would mind higher oil prices in the rest of the world, but lower oil prices domestically. And I think with the uncertainty that we're going to see globally, the chances of some sort of supply shock. I mean, remember
possible.
when if Saudi, so the OPEC cartel is very different to historical cartels like tin cartels, coffee cartels, etc. Because Saudi Arabia has such a prominent place in the OPEC cartel that it is to an extent more. It's more like a monopoly on oil. And if Saudi Arabia decides, actually, we don't like the sound of oil going down, we're just going to shut down production and really curtail supply to try and lift prices, it's a very difficult, I suppose, needle to move. And I think if you get it slightly wrong in terms of your growth estimates, if the world starts growing a little bit faster, there's more demand coming through, and they maybe keep the taps closed a little bit too long, I think you could get a temporary spike. I do actually agree with Viv. I think we are in for lower oil prices this year. I really do believe that. But I feel there's enough uncertainty that this, if you look at it, this is not will oil finish above $90 a barrel. It's will it trade above $90 a barrel at some point. And this is the Brent crude oil contract. So you'll remember when we almost hit tank tops, which is basically every production thing is full when Russia and Saudi Arabia decided we're just going to keep pumping in the middle of COVID, and so we suddenly couldn't store the world's oil. We had that, I think it was some asphalt sour, Wyoming asphalt sour, I think it was. It was one of the US contracts that actually traded negative. So you do get these big price swings in oil as well. And that's why I'm saying this could spike above 90. The bet is at some point during the year, I'm going to go yes. But longer term, I think we are in for more suppressed oil prices this year. Okay, Bitcoin. Will Bitcoin finish above 120,000? We both going yes. When did we become crypto bros, Viv?
In fact, I would think this this is probably an unfair one to a certain extent. This is almost it's one of the higher probability things to happen. Is 20% up from here, so I don't think that's like a huge call. I think if we'd asked maybe 150, maybe 200, that might be a more aggressive.
This is finish above, though. This is not trade above. This is finish above. This means a year from now, we'll be above 120,000 on Bitcoin.
So the US recently released a guy called Ross Ulbricht, and he basically was the guy who used to run Silk Road. Silk Road was a marketplace where you could buy Bitcoin or use Bitcoin to buy stuff, things like drugs and assassinations. Literally, you could pay to kill people. Anyway, he was put in jail for life. Trump released him, not just released him, gave him a full pardon, and said that the people that put him in jail were scum. Use that word, scum. That means that Trump is going to be a lot more positive on crypto than his predecessor was. The person in charge of crypto is a guy called David Sachs. If you watch the All In podcast, He's basically one of the guys there. He's, by the way, a South African. South Africans are playing a huge part, not just Elon Musk, but people like David Sachs in the Trump administration. He's the head of AI and crypto, right? So I think that the Trump administration is going to be a lot more in favor of crypto than any previous administration. And the important thing about this is that the US plays a disproportionate role in the global financial market. Because the dollar is the de facto, intermediate currency. And so if the Trump administration is going to be saying yes to crypto, Europe might not like it, but it's going to be a lot more, in use going forward. And so therefore, I think Bitcoin, of all the cryptocurrencies out there, maybe besides the Trump coin, I don't know if you guys saw that, is going to be, probably one of the things that does benefit. So yeah, I think this is a relatively easier bet to make than somebody
I was
else.
going to say he's in the middle of a pump and dump at the moment.
Oh yeah,
yeah. So yeah, definitely. I think regulation around crypto are going to get a lot more friendly. I think what we've seen over the last year is that it's become a lot more formal market. There's active products that sit on exchange that are sucking up a lot of demand. Investors that were maybe previously uncomfortable about going and getting a hard wallet and actually buying their own crypto because it's difficult, it's expensive. Suddenly you have these exchange traded products where you have all the protection of an exchange. You still face the volatility of the thing, but you're not going to lose your flash drive and then suddenly lose all your money. It's sitting with a proper custodian. I mean, our Swiss banking partner, Swissquote, was actually the first Swiss bank in Europe that would accept custody of crypto. It was one of their big pushes, and you can now transfer a Bitcoin in from a hard wallet into your Swiss bank account, have all that FINMA protection around it. So it's something that the developed markets have taken very seriously. They see this as a viable alternative to, not an alternative, but it's a real asset class. It's a real store of value. It can potentially be a medium of exchange as well. So I also think higher in the short term. Again, a lot of the kind of caveats around gold as crypto as an investment, I think also still stand. It's very difficult to price and value something that's function as a medium of exchange, because how do you price that? It gets very deep into very complex monetary economics, and I don't think it's there yet that we can actually even do any sort of accurate predictions. I've seen guys talking about like potentially pricing it off the energy cost of running the networks and mining the next coin. But again, I kind of almost follow the Warren Buffett philosophy here as well. Like, it doesn't actually produce anything, and it's just what someone else is willing to pay you. And that's always going to be a concern for me. So I think high volatility, still a very small part of your overall portfolio for my money anyway. But of course, if you believe in crypto, like I said, we have a lot of self-directed clients that buy a lot of crypto in the formal exchange traded products, and they've done absolutely spectacularly well. So maybe it's squarely in the alternative category, but it's not like a stock, it's not like a bond, it's not going to pay you a dividend, it's not going to give you a coupon.
It's like gold.
It's like gold. You need someone else to believe it's worth more than this.
Like gold, I mean, for over time, we just believe that yellow metal is worth more than the other metals,
and that's enough.
That's enough.
Yeah. And it's worked for thousands of years. Yeah. So yeah, we're quite bullish on crypto at the moment. Okay, so let's go look at currencies quickly. Will the rand dollar exchange rate finish above 20? Viv? You're saying yes. I'm saying no.
I'm positive on the US dollar. I think there's a little study out there showing that if you have a 10% increase in tariffs, the dollar gets stronger by a couple percent. It's not 1-to-1, but it is an increase in tariffs does call the dollar to get stronger. We know Trump is in favor of tariffs, and that might help out. Also, I do think that going forward, the dollar is probably looking stronger just because the US economy looks stronger than any of its rivals.
Yeah, so my call a little bit different from Viv, and again, we kind of try and peg this at like almost 6%, but the currency's been so volatile. We've been at 19.20, we're back at 18.50 today on US dollars. So I mean, huge volatility in the rand. So it kind of also takes where you kind of almost take your base assumption. So I'm saying 6% growth from here, which is kind of a long run average. I don't think I think we're going to be just under 20, but it's a very borderline call. I think one of the reasons that I'm maybe a little bit more pessimistic on the dollar than Viv is that I watch the dollar index quite closely. We had the dollar index down at about 100. We're at 110. We've just pulled off 110 recently ahead of the inauguration now. So I think we're trading around 108 at the moment. And the dollar index is essentially, it's an index that which measures a basket of, I think it's 6 of the US's biggest trading partners. And the dollar has been on a stellar run. Markets are forward-looking. They price these things in. I think the thesis is right, but I think some of that is already in the price of the dollar, which is why I'm a little bit pessimistic. Longer term, I do think the rand-dollar exchange rate is going to weaken, but I don't know if we're going to finish above 20. We might just have that patch in the sun where the rand gets a little bit stronger because it is a super volatile currency. So,
but do you think if it hits above 20 and stays above 20, we'll hit 21, 22 much more easily than you would think, because the psychological level is really important in currency markets.
Absolutely. And I think also just remember that things move on a percentage basis as well. A move from 20 to 30 is only 50%.
Yeah.
That's the same as a move from 10 to 15.
Yeah.
It does tend to accelerate when you're just looking at the number as well. So, but yeah, I may be a little bit more bullish on that. Viv, we're also disagreeing on euro dollar at the moment. Yeah. So yeah, I'm saying yes, you're saying no.
Yeah. Again, this is it just feels good to understand how the ratios work. I'm seeing dollar stronger, euro weaker. Gary's saying the opposite.
Yeah.
And again, my thesis is that the euro is the eurozone is in real trouble. If you look at the growth rates that we're going to talk about later about GDP growth rates, and we have as a number for the US, as a number for Europe, and the European number is consistently lower than the American number. That's because predictions are that European growth is going to be very bad and has been very bad going forward. And I do think that the US may not be there's weakness in the US, no doubt, but nobody else looks stronger. And that's why I still go for the US.
100%. And what I'm saying is we've already see that the US is stronger and a lot of this is priced in. And I think a little bit too much is priced in. So yeah, a little bit of a fundamentally different view on the dollar against the rand, the dollar against the euro, but we both agree on the pound.
Yeah.
And I think this is not so much a story of dollar strength, but a story of pound weakness.
Yeah. And I mean, the Labour administration has been spectacularly, bad at doing a few things over the last,
We're saying no, or we're saying yes on this one?
We're saying basically no. So this is basically we'll be below, which was 125 to the pound.
I think we need to change the slide. I think because we're saying it's going to finish above 125 to the pound.
Yeah, we said no.
Yeah.
Okay.
No. Okay.
So both said
yes.
No.
Yeah.
Okay. So so I do think that it's going to be like maybe not to parity, but it will be like a bit better. But the Labour administration very negatively looked at by people. Apparently, they're losing something like 1 millionaire every 40 minutes or 45 minutes from the UK, because the Labour administration is very in favor of taxation, in favor of basically sneaky taxation, especially around businesses and individuals. They've changed the laws about who can and cannot stay in the UK without being taxed. And those things are driving a lot of money out of the country. Therefore, the pound should be weaker because of it.
100%. Yeah. Looking at dollar yen. Okay, dollar yen above 160. Where are we trading? We're like 155 at the moment.
Yeah.
And I think this, I mean, we have a very similar view, I suppose, on the Japanese, not economy, but the Japanese debt situation at this stage. I mean, debt to GDP in Japan is like, 263%. It's going to be very difficult for them to lift interest rates. I mean, Bank of Japan is talking about increasing interest rates, but it seems like the mechanism that is going to have to play out here is a weaker yen.
Understand what that means. The 200+% GDP, you put in a 2% interest rate, you pay 5% of your GDP as an interest payment. Okay, you put in a 10% thing, you're paying 20% of your 25% of your GDP as an interest payment for the government. The government doesn't raise that much money, so they can't do the kind of interest things that the US has done, especially longer term, because they just owe too much money, and a high interest rate is just going to be impossible to do. And so therefore, a low interest rate usually goes along with a weaker currency.
Cool. Interest rates and inflation. Okay, so will the US Fed cut interest rates 3 times or more in 2025? We're saying both no.
Yeah, and I'm using a bit of there's an economic reason. Let me give you a psychological, political reason for this. Jerome Powell basically doesn't like Trump. Okay, Jerome Powell also is probably going to be kicked out in the end of the next term, because Trump has already made it very clear he doesn't like him, doesn't want him to be there. Now, Powell is not going to do many favors, and we're going to see inflation probably not come down as fast as we'd hoped for. And so Powell, from that point of view, does what sorry. So Powell does it was have all the incentive not to cut interest rates unless he has to, number one. Number two, in terms of politically, the most popular, the most widely respected of all central bank governors is Paul Volcker back in the day. Now, Paul Volcker basically is famous for what? Having interest rates higher for longer to fight inflation. And so from a pure legacy point of view, because like I said, this guy's not going to be in power in more than a year from now, or much more than a year from now. It's better to err on the side of actually high interest rates fight inflation as opposed to be like an Alan Greenspan, which is just like print the money, because Alan Greenspan's reputation has gone down the toilet over the last few years. So politically, he does not like Trump, and from a rotational point of view, there's no incentive for him to basically try and cut interest rates too fast.
Yeah, I believe you guys haven't been able to see the screen.
Oh, okay. Yeah.
You've just been looking at our faces, but
apologies for that.
But hopefully you guys can see the screen now. Yeah, so just in terms of so in terms of interest rates, inflation as well. My view also, I mean, last year, if we look back to last year, I mean, everyone thought that interest rates were going to be cut aggressively. I don't think we've had inflation drop enough. And I mean, if you go and look at Fed funds futures, which is essentially the market telling us where interest rates are going to finish the year, we're talking about one, maybe two cuts. And I'm basing it on market pricing. Now, that's what we did last year, and we're wrong, because markets are not always wrong, but they are an incredibly good gauge of what is going to happen in future. And sometimes the situation on the ground changes, and when that changes, then obviously market pricing changes as well. But currently, the pricing is for about one, maybe two cuts, and that's a lot shallower cycle than we were expecting. So that's why I'm also going no. Will US inflation drop below 2.3%?
I'd say no, and the reason being is that Trump's tariffs, Trump's trade wars are not going to be good for inflation, and that's been pointed out by the US Fed in a number of its recent meetings.
And I suppose that the only, one of the arguments against it is if he can get oil prices down in the US as well, I mean, that could constrain inflation. If we see a massive rally in technology tends to be deflationary as well. Things get cheaper when better technology is in place. But you do get the sense that if this gets anywhere near inflation, I don't know, like you're going to see central bank moves as well, I guess. I mean, I think it's a very different situation from South Africa, where we're sitting right at the bottom of the target band, and the US, which has that 2% target. And the US isn't close. When I say it's not close, it's really not close to that 2% target. And that kind of 3% level has been a lot more sticky than people have expected.
Especially core.
Yeah. Sorry?
For core.
Yeah.
So there's something the CPI goes below the 3, but the core has had difficulty getting below 3.
Yeah, 100%. Because obviously the headline CPI numbers, that's got the food and energy in it. You strip that out, then you're dealing with what's actually happening on the ground. Of course, the Fed actually looks at PCE as well, so they're not looking at the kind of typical CPI numbers that we're talking about here. But yeah, I think inflation has just been more sticky, which is why interest rate expectations have changed. So we move to the next one. So we actually disagree on the next one, which is, will the South African Reserve Bank cut interest rates 3 or more times in 2025? So I'm saying yes, I think we will, because I think, remember the US front-loaded that first interest rate cut, 50 basis points. They were very aggressive in their cutting cycle in the beginning, and they seem to almost be taking a wait-and-see approach at the moment. Our Reserve Bank has been a lot more constrained. We've obviously got a meeting, MPC meeting on the 30th. We'll hear the announcement. And we're looking at 25 basis points. So I think we've already got one in the system. I think there's room for 2 more, because I think we're still catching up to the Reserve Bank. I don't think there's going to be 4. But I think we'll get to 3 this year, because unless they do something crazy and cut 0.5%, then that's off the table. I'll be wrong on this one for sure. But again, we were, until the CPI print this week, we were below the lower end of our target band. The midpoint is a 4.5%. We've got a 3 to 6% inflation targeting framework. So 4.5%. We're at 3 at the moment at headline. Sure, I think we're 3.6 on core, but there's room to cut here, like in South Africa, and I think we're going to get it. But yeah, I think we will also be constrained. I don't think there's 4, and this is a borderline call
Yeah.
on my side. But Viv, you're a little bit more conservative.
Yeah, look, you saw my pick on the rand. I said it's about 20. If the rand goes, weaker in the year, the Reserve Bank has to err on the side of caution, because the one thing you got to say with the South African Reserve Bank, it's handled the currency very well. You compare us to competitors in Africa, in places like Turkey, in places in Europe, in Asia especially, things outside, for instance, the Chinas or the Japans or the EU and so on. We have been one of the better performing currencies over the last couple of decades. And the reason for that is that the Reserve Bank has always been cautious about protecting the currency. And so I think if we had to make a choice between going too much or too little, they'd rather cut too little, just because it will be the thing that preserves the currency. And I think, given my view that the currency is weaker, I think the Reserve Bank is going to err on the side of not cutting as much.
So will inflation fall below 3%?
The question here is whether it'll happen at any time in the year.
Yeah.
This is borderline. So I'm arguing no, because I think some base effects are going to come into play. I think we're already starting to see petrol prices rise, because we've seen, the round a bit weaker, seen the price of oil going up. I think there's a possibility that load shedding might return this year. In that scenario, the round weakens, and again, inflation becomes more of a problem. So that's why I would say no.
Yeah, and again, I think this just comes down to our overall view, maybe on the currency as well, feeding into it. Because yeah, I'm also saying I think it will. I mean, remember, we had a print below 3% recently. 100% was right. There are base effects. There is the petrol price argument as well. I mean, I think between May and September it was like $4.40 a liter that came out. December we had a 17-cent petrol price increase. So yes, that is going to feed in, but we're right on the bottom of the band, and while the base effects are working through, with a slightly stronger currency, and I just think I don't, like kind of most forecasts that I've looked at is that we're going to have fairly benign inflation for most of 2025, which for me means we could potentially get that extra dip below. That could then prompt the government to just give us one more interest rate cut. So slightly different views there, and that's kind of where we're differing on it. And the next question is economic growth.
Yeah.
Okay, so will US GDP exceed 2% in 2025?
I say yes. Look, by the way, all these numbers are the forecasted numbers for the next year. So we are asking more or less than the forecasted numbers. So 2% in 2025, I think the Doge thing is probably going to be a bit more positive for the US than people had thought. He's not going to cut spending that much. That's Elon Musk. He's alone there, by the way, at the moment. But he's going to cut regulation by quite a bit. I think that's going to have an impact. I do think that things like AI are going to play a bigger deal in the world, and the US is the source of AI at the moment, so it's going to help them out. And in fact, if this is a longer term thing, not for this period, but for the next, say, 5 years, I'm telling you, my prediction is that by 2030, the next like 5 years from now, we will see 1 year at least of US growth exceeding 5%.
Which is the big bold prediction of this webinar.
Yeah.
I'm holding Viv to that. I've got that written down, and I'm going to be watching it because that is an astounding number. If the US can grow at 5% off the base that the US is on at the moment, I mean, we're talking about massive technological shifts in output, in the ability to create output. It's massive. I mean, if you read Alan Greenspan, he was always like, the US can't grow more than 3% because we are just not smart enough as humans to generate that kind of increase in output.
But if AIs are here, they're smarter than us.
They're smarter than us. That's it. That was Alan Greenspan's view. I don't know, because I think just a huge population that was very well organized could probably do it, but that was the old Fed governor. So yeah, I agree. I think US, like the whole US first policy. I mean, you'll see just from the geographic location of so many of my global equity stocks. I mean, I'm very bullish on US growth. The US is flexing its muscle in the world. It's a US first type world that we're going into, and if you had to back a winner, you're backing the US. So yeah, growth above 2%, I think very, very, very possible. Will China's GDP growth exceed 4.5%? So I'm going yes. Viv is going no. But I think this is also, Viv doesn't believe the numbers in China. And I think it's difficult to believe the numbers in China. But also the Chinese authorities are telling us they will grow above 4.5%. And if we're looking at this in what is going to print, I'm saying the Chinese kind of tell you what they're going to do in GDP,
Yeah.
and they will deliver that in their numbers. So I think I'm saying, looking at what China says it's going to grow at, I think it'll beat this.
Yeah, look, yeah, it's right. Gary's right. The Chinese fake these numbers. These numbers are not real. But if you look at the actual underlying, I would say probably not. I don't think last year they grew at what they said they grew at. I mean, the reason I would put that out there is just because the government is so nervous about unrest. There's so many indicators that the Chinese people themselves are not in a great situation, and that all comes down to the fact that the economy is not growing like it should be growing. So the reality is probably going to be, I'm right. The number coming out is probably going to be Gary right.
Yeah. So there's the yes, no for you. Okay, yeah, EU growth exceeding 1.5%, 2025. No and no. Yeah. I also don't see it.
Yeah, Europe is in the,
It's in a real trouble, man. Like,
yeah, the biggest economy in Europe, in Germany, is having some of the weakest growth of any country in the EU. And the next thing is that driverless cars, again, coming back to the car thing, look at the chunk of the German economy built on industrial uses towards cars and other machinery. The Chinese are taking up. That's
BMW,
Audi, Porsche, all those things.
Yeah.
I think in the next 5 to 10 years, we will see all big names in the car industry, like how Jaguar fell down. We will see BMW and Audi and one of those big car companies fall down the same way. I do think that the German industrial machine is hitting too many barriers, and that's why I don't think Europe is going to do very well.
Okay. India's GDP growth exceeding 6% in 2025. Yes and yes.
Yes.
Yeah.
I think that country has been growing very fast. It's generally been exceeding it for the last little while. Look, the government of Modi is getting a bit old along with the tooth, and therefore maybe they might be hitting some issues. But I think there's enough underlying, positive momentum there to get them over the 6% number.
Yeah. Okay. South Africa's GDP growth to exceed 1.5% in 2025. Are you saying no? I'm saying yes. Why are you saying no?
I'm saying no because I think load shedding might return this year, which is obviously going to be a dampening on the country. I think because of some of the factors you put forward, like for instance, the higher, the weaker currency might, affect interest rates, which is also going to be negative. And I think also what's been happening is we don't see the kind of results we want to see from the GNU. In terms of actually fundamentals improving in the country. So the growth in terms of the stock market, the growth in terms of the currency, in terms of valuation over the last little while, has been really good. But we don't see that translating into actual, GDP on the ground.
No, it's interesting. So I've been looking at all the retail sales updates. So we've had like Clicks, ShopRite, or Clicks, Mr. Price out. It seems like people are spending. We've had it seems like this incredibly constrained South African consumer, it just feels a little bit better. My view also, again, this kind of comes down to the slightly different view Viv and I have on the local economy. I think that our inflation is going to remain a little bit more benign. I think we're going to get a few more rate cuts. I think all of this is going to feed into the local economy and start to just heat things up a little bit as well. I also get the sense that if we do get real, I suppose, industrial growth, across the global economy, we could see a little bit of a lift in commodity prices as well. And if we see a lift in commodity prices, it's going to be good for our mining sector as well. So maybe not the platinum miners. I mean, like I said, I don't think there's, I'm kind of always very skeptical around the PGM miners, but the rest, I mean, maybe we get some infrastructure projects, although I can't see the spending really taking off. But I think 1.5% is still a very conservative number, and I would probably err on the side that we're going to see a little bit more growth. Does that mean that we're going to see stock market growth, though? I don't. That I'm less optimistic on. Stock market growth, the stock market is a great predictor of economic growth. Economic growth isn't a great predictor of stock market growth. And what we've seen over the last year is we've seen a really strong South African stock market, even in US dollar terms. We beat Europe. We beat the FTSE. We definitely beat South Korea. But we didn't beat Argentina, who beat everyone. But we had a really strong year in dollar terms on our market. Now, what that's telling us is the market is telling us that we're going to get a strong economic growth this year. But because we've already seen the pricing in the market almost predicting this, I don't know if our market is going to have the same growth. And we've seen it again. I'm going to point at the retail updates that we've had so far. I mean, Clicks update knocked it. I thought really, really strong. Mr. Price opening his 3,000th store. Really, I thought good numbers overall, everything positive outlook on the year, all the right noises in the trading statement. Stock market both of them down, around 4%. So I just get a sense that the stock market may be a little bit expensive in some of these names, but I think that we're going to see the economic growth coming through. That's why I'm a yes. Viv a little bit more skeptical, and that's why I know. Okay, politics. Will Elon Musk and Donald Trump alliance survive?
Yeah.
I suppose a yes.
Yeah,
that's a bromance.
That's bro, but also they need each other. The Trump needs Musk because Musk basically has the bucks to basically make sure that anyone that gets out of line from Trump's agenda. Trump has the House and the Senate as well as the presidency, but the margins are very small. So if you want to go against Trump, there needs to be a penalty. Trump has his last term, so he can't basically be around long enough to basically hurt you in the long term. So there must be a short-term like stick to hit you with, and the short-term stick is Elon Musk's money. Elon Musk can go to the guys and say, you don't want to vote for Trump's policies. Next primary election, I'm going to put money into the other guy. So it's still going to be a Republican winning the election, but it'll be the other Republican winning it. And that is what what Trump needs. Musk needs Trump because basically he's the president, and Musk needs that at the moment. So
he just wants to launch rockets. He's saying, how can I build a rocket faster than I can get paper moved across a desk? That's just crazy.
Trump will do the thing, And also, Trump will give him TikTok, which we haven't talked about, and Trump will give him basically approvals for Tesla across the entire country.
And now there's rumors swirling that Elon might be buying Intel as well.
Exactly.
Hey, listen, it's not official, but where there's smoke, there's fire. What do they say? Buy the rumor, sell the fact.
Exactly.
So I think yes as well. I think they kind of suit each other. Will South Africa's GNU survive? I also think it'll survive.
One more year. The DA has bent backwards to make it survive over the last little while. I don't see them basically cutting off this year. Maybe next year, the after might be more likely that they break up. But this year, I mean, unless they push the NHI very strongly and some kind of, pushback happens in the DA, I don't see them falling apart this year.
At this stage, I think it's almost like Elon and Donald Trump. They need each other. Will Keir Starmer survive as the UK Prime Minister? We're both saying no. And I'm basing this on the track record of UK Prime Ministers. It just seems like, no one survives long as a UK Prime Minister, right?
Yeah, I mean, it goes, the last really long term was, I think Boris Johnson was for a little while. But most of these guys don't last very long. And the reason being is that you can kick out the Prime Minister and still stay in power. And the Labour guys know that they are very unpopular. They need to make a change. And Keir Starmer right now is not very popular. And the Labour Party is, I don't think has the loyalty they had to like Jeremy Corbyn. So kicking him out if things don't look great, I don't think that's an impossibility.
Good. Okay, now on to markets. So this is what we did really well last time. And I think we're quite bullish. So will the JSE All-Share Index finish above 83,000? Yes and yes. Will the S&P 500 finish above 6,000? Yes and yes. I think while maybe softer local market, like I said, still 83,000 not an excessive target for our exchange at the moment. So will the Nikkei finish above 39,000? Yes and yes. And I think that comes down to we're talking about a world of a weaker yen, and a weaker yen is actually very good for Nikkei index numbers, which is also why in our structured products at the moment where we have the Nikkei contracts, I think we're quite convinced that the yen is going to weaken. And if the yen weakens, that boosts the Nikkei, which kind of gives you this almost like freebie index that you can include in structured products that will end positive. So I think also a high chance that we'll see the Nikkei up from here. I'm going a little bit faster through these ones because it's just the numbers. This one's an interesting one. Will the top 10 S&P 500 stocks account for more than 35% of the index? Yes and yes.
Yes, and the reason is that I think that the AI situation is the one that's driving these particular things. The biggest companies are AI driven, and I think that this is a year in which we're going to get some really good AI programs coming out.
It is a concern though for me. It is a concern. So yes, the trend has been to see the S&P 500 index become more and more concentrated in these top 10 stocks. So to have 35, you go and buy an S&P 500 contract, a third of your money is in 10 shares.
And his name says it's 500 stocks.
And it's 500 stocks, but you're actually putting a third of your cash in 10 of them. Now, will those 10 keep going? I think yes, they will. I also think that yes, they will. I think you're going to maybe see, you'll see a shift up at the top, but the trend has been clear that this index is becoming more and more concentrated over time. It's also one of my big fears that I'm going to talk about a bit later on, but for now, the trend is clear. This is becoming more concentrated. Unless we see, I mean, what would it take for this to broaden? I mean, what would it take? Because you kind of feel like the top 10, I mean, the Magnificent Seven at least, their success is going to be the rest of the market success. If they fail, like, how does the rest of the market benefit while they fail? I can't really see an environment in that where that happens.
But I mean, I think what could happen, a couple of things. Firstly, I think that, for instance, now that Nina Khan is gone from the FTC, you could have more mergers, and therefore someone could overpay for something, and therefore you could find the pricing come down a little bit. Maybe that might be something, but that obviously will still increase the valuation. I think that would.
But you would still have a consolidation. Yeah. So
I think maybe I think the biggest thing here would be something like an Nvidia or a Tesla or just something like Microsoft, basically losing out to somebody else. So Nvidia, if, for instance, we see an AMD take off, and we see Intel being bought by Elon Musk, we take off. I think Nvidia is vulnerable to something like that there. Tesla, of course, Elon Musk could do another salute that people think is a certain kind of salute and not another. And who knows, in fact, like Elon Musk having any kind of issue happening with him affects that stock a lot. And I think there's a number of ways in which individual companies, and I mean, it's only 10 companies, one or two of them goes down, it makes a big difference.
Yeah. Okay, will the MSCI World Index finish above one?
I just mean say yes.
Yeah, definitely. Let's not point out that one. So yeah, okay, so the black swans. Okay, so these are kind of the fun ones. Okay, will a new nuclear power emerge this year? I'm saying no. Why would we? Who is the new nuclear power going to be?
Okay, so this is obviously, these black swan things are most likely you can just say no to all of them, and you're more likely not to be right. But
these also don't count in your score.
Yeah. But I want you to put these things in mind. So countries that could have nukes by the end of the year: Iran, but places like South Korea, places like Japan. Why? If there is belligerence between the US and China, Japan, if it has a nuke, is a much safer place to be in. South Korea definitely would want a nuke, and South Korea's political situation has been very much in flux. Someone like Taiwan could have a nuke, as well. The nuclear power is, remember, 70 years old. This is not exactly like the most difficult thing to do. If you have that, we in South Africa had nukes, and so it's possible, especially places like Japan already have nuclear power plants. They could make these nukes very easily. So I think that if things get a bit hairy in the world, countries like Japan, South Korea, like we mentioned already, Iran, but also like places like Taiwan could go towards nuclear weapons just as a deterrent. And there's also the possibility that it might happen in Eastern Europe as well, but that's a bit more out there. But definitely in Asia, there's a huge reason that Japan and South Korea would want to have nukes, and they can do it if they wanted to very quickly.
Okay. I'm going with the status quo.
Yeah.
I'm here for the points.
Yeah.
I'm going to say no.
Yeah.
I'm going to say that, I think there's enough control in among the current nuclear powers that they would be able to apply enough pressure to any country to stop a new member joining the club.
But I think in this case, because both Japan and Taiwan, and South Korea as well, all these three countries are effectively US subsidiaries. It won't be like they are like India getting a nuke, which is like a total out there. I think Donald Trump could be made to agree that Japan needs a nuke. And Donald Trump, by the way, here's a weird thing. Shinzo Abe, the former prime minister of Japan, was very close to Donald Trump. I mean, people have talked about who had the best relationship of all the leaders. It was with Shinzo Abe in Japan. Trump, as much as he may not like South Africa, he loves Japan. And if they come to him and they say they need this here, I can see that going through. And South Korea literally is, and so does Japan. They have US bases in their countries.
Fair enough. Time will tell, but we'll check back in. Will China invade Taiwan? I'm going to say no. You're going to say no?
We would say no. I think this is unlikely to happen. And I think the reason is quite simple. I think the Chinese are a bit too weak at the moment.
But too weak. And Trump's a little bit too crazy?
But too crazy, too scary,
yeah. Will Donald Trump acquire Greenland, Panama, or Canada? I'm saying no because Trump's not crazy enough.
I'm saying not this year.
Oh, you saying not this year?
Okay. But I do think, here's the thing. Greenland makes so much strategic sense for the US to acquire. It's only about 60,000 people. They could basically pay each of them $1 million and get $60 billion and buy this thing out. And that would be a fraction of what they spent on Ukraine over the last couple of years. Okay. And the thing is that Greenland is part of Denmark, but the Danes don't get a lot from Greenland. They basically pay about I think $600 or $700 million a year to Greenland to basically. The population is a different ethnic group than Denmark. It has a lot of problems and issues that the Danes don't have, and so therefore they have to kind of subsidize this area. So I think, from that point of view, it kind of makes so much economic sense that it might just happen in some form or the other. Panama, this doesn't make sense, but Trump might do it anyway. The reason being is that it doesn't make sense is because he talks about the Panama Canal and how much it costs U.S. Ships and whatnot. The Panama Canal brings in $5 billion a year. If you have to basically invade Panama, the transport cost of getting your people across to Panama in the first place, especially considering how expensive the U.S. is going to be too expensive. And for Canada, I mean, no, Canada is part of the Western order. There's no way there's going to be any kind of acquisition of Canada. And if they did, it'll be probably the bluest state in the US, and make sure that no Republican ever gets another election win again.
Yeah. Yeah, no.
No.
Okay, so will the banking crisis emerge? Will a new banking crisis emerge with significant bank failures? We're both saying no at this stage. I think the banking space is looking a lot more secure than it was a couple of years ago.
In some ways, but in some ways not, because interest rates have been higher for longer.
Sure.
And therefore that makes the thing more vulnerable. The longer interest rates stay high, the more vulnerable things are. I'm saying interest rates are going to stay higher for longer.
Sure.
But here's one thing about this particular one: if you get if this does happen, and you make a bet on this isn't like a 50-50 thing. You would get probably 100 times your return. 100 times your investment if you get it right. If you do it in the right way, you buy like a kind of default swap or something, you could get a huge return on this thing if it does happen. So it's worth keeping in mind as a possibility. Unlikely to happen, but if it does happen, this is one of those things where you can make a fortune out of very little money.
Okay. Will there be an S&P 500 drawdown of more than 20% in 2025? And we're both saying yes to this one.
I think this is a possibility. I think they might end the year positive. And I think a 20% pull down. Remember the stock market, I looked into this, is once or twice every 5 years has a, say, 10 to 15% pull down. And that is like not an unusual event. So talking something bigger than that, as frothy as some of these things are, let's just say we have a couple, negative events around AI or the conception of certain things out there. And we have come like, NVIDIA have come down. Very easy for us to see this happening.
Yeah, again, a very concentrated index. And I feel like we're moving into this greed situation here where there can be, a little bit of nerves, and I think you can see some big volatility as well. Does that mean that we're going to finish down? I don't think we'll finish negative, but I think a 20% correction this year, I'm willing to try for an extra point on that one.
Okay.
Obviously, very, very difficult to predict those kind of things, but you also can be very, very temporary. So, yep, that's the question. So if you would like to go submit your answers, obviously we give away a prize afterwards. You just go to randswiss.com/predict-2025, where we'll put it in the webinar invite on the way around. Okay, so practical application, just a quick update on the portfolios. As you guys know, we're on a global equity portfolio. It's pretty concentrated. We had a tough year last year because, again, I'm worried about the concentration risk in the S&P 500. Just to give you guys an overview, I do think America first. Now, it's probably an unfair map that's up on the right-hand side here for Morningstar, in that, it looks like 99% US. The kind of companies that we're buying might be US domiciled companies, but they are multinational companies that operate, across the entire world. But looking at it, the big shift that we've made in this portfolio over the last little bit is really selling down some of the growth companies. And I think one of my concerns around the market in general is that some of the more expensive stocks, you're starting to feel that greed. And I do think that you could potentially get that little drawdown. And we've shifted it more towards a value style portfolio. So you can see between value and blended, that's the bulk of the portfolio. Whereas on the other side, 15.9% in growth, we've got a lot fewer growth companies at the moment, and I'm positioning a little bit more defensively. You can see in our risk reward scatter over here, we've got, that's the benchmark. Benchmark is MSCI World. The performance has been better than the MSCI World. And the risk has actually been less. You want to be as up and to the left of this quadrant as possible. And it's just also, it's part of the mandate around this portfolio is that, it's a 100% equity portfolio, but it's designed to be robust. move through market cycles and deliver performance over a 5-year period. It's not the kind of portfolio that I want to take excessive risk in. When I get to 10%, when a position grows to 10%, I trim it. I don't want to take a huge concentration risk. I'm trying to build a diversified portfolio that gives you something different from the S&P 500 index or something that's particularly concentrated. You can see historically, like compared to the MSCI World Index, this is just a drawdown report. The drawdowns have been generally a lot less than the overall market. Obviously, 2022, we were very much in line with the market in that drawdown. I mean, just a word on our benchmarks as well. We deliberately, the benchmarks that we select are trying to be representative. We don't take performance fees on these funds. So outperformance, underperformance, it's more to give you an idea of when you're investing in the portfolio, what is it kind of like, what universe or what is a similar type product? It's in the same fridge as all the other beverages. It's Coca-Cola. Pepsi. So it's a beverage. And that's what we're trying to express to you in this, that this should behave like an MSCI World, but it's trying to give you something different from the MSCI World that will behave a little bit more differently as well. Viv, your portfolio. So Viv was killer last year.
Yeah.
Absolutely killer. So here, the AI portfolio.
Okay, so as you guys can see, the AI portfolio is aggressive. Outperformance you can't quite see here, but I mean, if you look at it, it has a return since inception. Our portfolio has done 44.
Yeah, I was the seed investor in the portfolio. We hit 50% last night.
Yeah, okay. So we're up about 5% almost this 20 days since of the year. Versus our benchmark, which is up 30%. And this portfolio has been running for basically just over a year and a half. Okay, so we did very well over that period of time. And the adjustment here is that this is not like Gary's portfolio, which is a very, long-term stable portfolio that should work in almost every market. This portfolio works if the following thing is true. AI is real. If you think AI is real, you want to buy into this portfolio. And the reason I'm still positive about AI is I always say there's asymmetric information in the market. Sachin Nadella knows more about the AI situation than I do. He's putting $80 billion a year into AI, okay, with Microsoft. And now he's not like it's called Sam Altman, who basically needs to have AI as the reason for his company to exist. Before AI occurred, Sachin Nadella was still considered to be the best CEO that wasn't a founder of his company. After Tim Cook and so on, he basically multiplied the value of Microsoft. Most of the value of Microsoft was under his auspices, and so he's well regarded. He's wealthy. He did not need to bet the farm on AI. He is. Why? Because he sees something there. And as long as AI is real, this portfolio should outperform. Okay. The growth rate we're seeing here, is much, much higher than the Tools benchmark. You can see it's significantly better than the benchmark, but it's slightly higher risk as well. Okay. My benchmark, which I chose, was the Invesco S&P Equal Weight Tech ETF, because it's so much in the contrast with what I'm doing in this portfolio. Unlike Gary, I don't cut when things get to above 10%. I have cut in the past, but only because I don't like the company for whatever reason. I don't cut because of concentration risk. The reason for this is very simple. If you go back to 2000 and late 1990s, if you were investing in the internet revolution and you followed a policy of trimming your winners and basically making sure you don't have too much in any particular stock, you would significantly outperform what you would have done. Amazon, if you basically had bought Amazon as part of like a 5 or 10 stock portfolio and you had kept Amazon all the way through now, you'd be basically having 99% of your portfolio being Amazon. If you had trimmed it all the way, you'd obviously be losing the majority of the value that Amazon created over that period. So if you are believing that this is a technological revolution that's real, that's going to be long lasting, you don't want to trim things. And that's the philosophy difference that we do here. One thing to notice about the portfolio, and I just want to point this out, and this is a bit of a sales thing, but the minimum investment here is $20,000. That is not going to last for next month. So next month, we're going to switch that up. We're looking at improving it to between $25,000 and $30,000. The reason being is quite simple. From the time we got in, and we got in at about, back in middle of 2023, that's when we had the investment, I think it was $19,000 at the time, okay? It's now, that investment of $19,000 will be worth close to $30,000 at the moment, okay? And so just to maintain the weightings, we have to increase it. I'm not just doing this because I want to have, I'm too big for my boots, and I want to make sure that I don't have too small accounts. It's because what we're investing in has gone up so much in value that I can't do the same kind of balancing in terms of portfolio with $19,000. I need more money. And like I said, somewhere between $25,000 and $30,000 next month. But right now, we're still offering it at $20,000. Okay.
Cool. Yeah, and then onto the stock picks. Okay, so almost there on the stock picks. Okay, so this is what we did last year. So 2024. So also just something I didn't mention about my portfolio is that, you know, we base it, like I base it very much on underlying analyst kind of bottom up research based on target prices. It's one of the factors. It's a quantitative model that we run on a couple of different metrics that we say this is kind of like what our predicted target prices are on the different securities. So last year, literally what I did is I just ran that model across the whole of the S&P 500 and I picked the top 3. And that's what I got. So I got 23% up, 50% up, and 19% up. My average was 31%. But of course, Viv is also the winner of the stock picker competition this year, up 153% in dollars. Now, all of these figures, I've gone through them. We've used total returns. We rebase everything to dollars. So, for example, a SAPI move of 15% for Kyle, that was actually a dollar-based 15% that he made. Same as Sasol, that's a 56% dollar loss, unfortunately, which Viv took as well.
Yeah.
But sometimes also, like you say, you don't trim your winners.
Yeah.
Like, and that's the result you get.
And by the way, just
Palantir up 340%.
Yeah.
I'm sorry, all of these are also total return numbers. So it includes anyone that was picking something that had a dividend. The dividend has been included as well.
Just to make sure, we do have Palantir and Tesla in our AI portfolio, and Palantir is actually the best performing stock in that portfolio as well. So we do have both of these companies here. The reason I picked Sasol was because, like you saw before, my all prediction was quite off. And
and now you seem quite burnt by it enough to say that, well, it's not even going to get to 90. I think that view, I suspect, has something to do with the disappointments that involves mini portfolio from last year. That's kind of last year's picks. As you can see, Pascal had a Johnson Johnson. I think everyone outperformed the S&P 500 except Nikita Yaku and Pascal. And it really must have hurt Pascal because this year she's gone with Vanguard. So she's just going totally passive. That was her view. These are the kind of stock picks. Okay, my stock picks, I'm going with Ubiquity, which is actually a network company. It's very small. It's outside my universe, unfortunately, because it's just too small a company for global equity portfolio, but I really like the business. It's kind of the Apple of networking. It's routers and cameras and security and all sorts of things. Go and check it out. It's a really interesting company. AMD, that's literally comes straight off my quant scan. It's forecast to be one of the best performing stocks, or the stock that is at a largest discount to fair value based on our model. That's my AMD pick. And then Mercado Libre, which is the biggest e-commerce platform. It's actually domiciled in Uruguay, but it services the Argentinian market. As I said, Argentina had a bump over year. They have an anarcho-capitalist now in charge, and it's a speculative bet. It's a speculative bet on rising wealth and essentially e-commerce spending in Argentina. Like I said, Argentina's markets in dollar terms did absolutely spectacularly last year, and this is one of the ways that you can potentially access it. And weirdly, its ticker is also, it's almost but yeah, Viv, you've gone Micron, Alibaba, and Intel.
Yeah, and these are all actually part of my portfolio. I just bought Micron in December, end of last year, and it's done spectacularly well. I actually had to sell some on Palantir to get it. Not to say I've sold out of Palantir, I just basically sold what I paid initially for it because it's up like 3.5 times. And so I just effectively took out my initial investment on Palantir and put it into Micron, and Micron is up, I think, almost 20%. I just don't know the last number on that, but it's up quite significantly since we bought it in the last month. The reason we bought Micron is because people don't understand, or people say NVIDIA, and then they think TSMC because TSMC makes chips. But NVIDIA spends more money on memory than it does on anything else that it does. And memory basically is made by two places. It's Micron and then SK Hynix. SK Hynix is more difficult to purchase, but it's also done reasonably well. And Micron is the other tech company out there that does these high bandwidth memory chips. High bandwidth memory is very important, not for training, but for inference. And therefore, inference is going to be probably a market that's maybe 1,000 times bigger than training. It has to be. Otherwise, inference is how you use the product. Training is how you make the product. If you don't spend as much money using the product as you do training it, or maybe many times more money using it than training it, you don't have a real product. Therefore, Micron is there. Alibaba, positive on China. Why? I think Trump will make a deal with them. And I think already we're starting to see indications that he's much more amenable to make deals based on short-term positive things, especially for himself. And Alibaba will probably benefit if we do see that again in my portfolio. And then Intel, and Gary mentioned it, possibly a buyout by Elon Musk, maybe not. There was a meeting a couple of weeks ago where a bunch of very interesting people were in the same place at Mar-a-Lago, and maybe a discussion was had at the time. But even if not, I think Intel basically at the moment has such big positives, even though it's been weaker for a number of reasons. And if you do see the way the geopolitical situation is turning out, I think Intel has a great chance to basically do a bit of catch up. And it's so cheap at the moment that I don't think it's a bad punt to put in. Okay.
Good. And the rest, yeah, like I said, just some random ideas. We track them every year. We give away a little prize to the top stock pickers. That's our internal stock picking competition that we do. Yeah, if you are interested in getting started with us, just go to the website, you literally click on the open account button. You can also go to randswiss.com/account, stick in some details, send us an ID, all that, and then someone will give you a shout just to kind of walk you through exactly, whether you're going to be a securities broking client, a managed portfolio client, or whether you're would like a full kind of wealth review as well. And now to the prize giving. Okay, so the winner of last year was actually Ian Roberts, who's not on the call. So because he's not on the call, we're canceling
it. Ian, put your name up.
Ian, you better, if you're watching this right now, you better put a message in the thing, because if you don't put a message in the thing, we're giving it to Martin, who is on the call at the moment. And so he's going to win the lovely hamper of, oh, I'm disappearing, but the lovely hamper of Master Swiss chocolate, Lindt chocolate, as well as his choice of either the Rusty book or the Nick Mallet book that has been signed. Or he can have the offshore investing book, and that's not signed, but
we'll sign it.
Viv and I will sign it for him if he wants to have.
Pretty much wrote the book anyway.
So yeah, we'll pop you guys an email afterwards just to let you know. And thank you guys, and that's the end of the presentation. Went not too much over. It was looking in the beginning like we're going to be very long, but
some questions there.
Yeah, a couple of questions. Will oil price reach 100? I think we've answered this one. Yeah. How will self-driving cars and AI cope with our local taxis?
I think, okay, here's how it's going to be, right? Once it becomes fully used in the US, and I think that's going to happen in the next couple of years, it's going to be almost impossible to stop that influx into every other country. And what's going to happen is you're going to have it's like, well, how will cars adjust to horses? Horses disappear. Okay, how will taxis self-driving cars adjust to taxis? The taxis will disappear. Yes, there'll be fights. There'll still be some kind of Luddites that try and sabotage things. But I think over time that
the manufacturing engine of the world will be creating self-driving cars, and they'll want plants built elsewhere, and the whole manufacturing system of the world will shift towards it. And then we'll look at it and go, well, we can have this for more expensive, or we can have this that's self-driving for cheaper.
Also,
and it'll become an economic decision.
It's also safer. I mean, we're talking thousands of people dying every year because of
I think we'll be trailing, because we're out of the what do we call it in research, the walled garden.
Yeah.
But yeah, I think it'll be a while before we maybe get them. But
a while mean like 5-10 years after the US gets them.
Yeah.
Not like decades, but 5-10 years after the US gets them. And like I said, we're looking at thousands of people dying every year in South Africa from car accidents. That'll disappear.
Yeah, and the rest was actually share your screen, and then a question on quantum SI stock with protein sequencing.
I don't know quantum SI that well. I can look into it for you guys, but I don't know it.
Then a question on purple. I don't think we'll talk about another broker in the market. No, I like purple. I don't know about the stock. I don't think we'll comment on that one either. But cool, guys. All right, thanks a lot. I hope you enjoyed it. I hope you got some ideas that you can take away. If you've got any questions, our email addresses and contact numbers, just pop us a message, and hopefully we can assist. But thanks for listening. All the best out there. Happy New Year. Compliments of the season. Enjoy 2025. We think it's going to be a wild,
interesting year.